In this presentation, we're going to work a problem related to revenue accounts. We're going to post journal entries into the general fund as well as the government-wide fund, compare and contrast those two items. The information is going to be on the left side. We're going to put that into the blue areas on the right side, starting with the general journal. We'll then post the general journal to the trial balance where we have a beginning balance, adjustments, and ending balance. Our goal here is to have a trial balance so that we have something that starts in balance and we have a list of accounts so that when we actually post these journal entries, we get an idea, a feel of what they look like in context with relation to other accounts. So we're going to have our assets, liabilities, deferred inflows of resources, the fund balance, revenue, and then encumbrances. We're focusing here on the revenue type accounts, the allowance accounts, as well as the receivable type accounts, and this deferred inflows of resources. And then we're going to post this information again to the government activities journal as it relates here. Remember that this item is going to be on an accrual basis as opposed to the modified accrual for the fund. So this is going to be the government-wide activity. And we'll post this information here, similar type of process. We'll then post it, and we'll post it to the trial balance so we get an idea, a feel for what this actually looks like, what these accounts are actually doing in comparison in relation to other accounts using the debits and credits, seeing something that is in balance. So let's go to our data. First item we have levied property taxes, and we estimated that 2% is going to be uncollectible. So property taxes, we're going to say that's going to be revenue for this government agency. So we're going to say that's going to be revenue. We're in the general fund, so I'm just going to call it general. And then we're going to say that the taxes are going to be a receivable. So we've just said, hey, people owe us money, and we just automatically have a receivable. We just sent out a bill, and people owe us taxes. So we're going to say that the receivable is going to go up. And this would seem normal for if we were to compare this to normal accounting, accrual accounting. We would say, okay, you know, we could think of it as sending out an invoice. We got an increase in the receivable. The other side's going to be revenue. But we're going to say that there's going to be part of it that will be uncollectible. We're going to calculate that now, 2% of it. So we're going to say, all right, 2% is uncollectible. That's going to go into the allowance account. Therefore, the receivable is an asset. It's going to go up by the amount that we billed, in essence, levied. And then we're going to say that 2% is uncollectible. So I'm going to say negative this number times 2%. So we're saying that is uncollectible. I'm going to put the credits with negatives for the worksheet. That's going to help us to post this stuff a little bit more easily. And then the plug, the difference, is going to be the revenue, negative sum. The revenue that we're going to record is going to be the difference of the receivable minus the uncollectible portion. And we will, of course, record that to revenue. So that's going to be our revenue account. Now, note this looks a lot like an accrual transaction here, and it is. But we have a modified accrual, and later on we'll see and that means it's going to kind of tilt back to the cash basis. We're somewhere in between accrual and cash. And so we'll see that come into play when we deal with this deferred inflows of resources. So this looks like a normal type of, it is close to a normal type of accrual entry. Let's post this to the center column. We're going to post this item first. We've got receivables. So here's the receivables. We're going to be in cell L4. I'm going to say that this equals this 6790, and that's going to make our balance go up. Puts us out of balance down below. Note we're recording debits as positive, credits as negatives here. This makes it a lot easier for us to have our little worksheet to see that the activities happen quickly and use Excel formulas in order to record this information. Then we have the allowance for uncollectibles. That's going to go here, and it's in L5. I'm going to say equals and then point to the allowance, making it go up. So there we have the net of the two is what we expect to collect. That then it's going to be the revenue. We'll record revenue down below. We're going to say that this equals, and we're going to go up to the revenue. And there we have it. So the revenue credit, now we have basically revenues over expenses here, and that's on an accrual basis. We haven't, in essence, collected anything at this time. Next, we're going to do the same thing for the government-wide activities, and it's in essence going to be the same journal entry because the government-wide is on an accrual basis as well. And the transaction we just did in the general fund was on a modified accrual, but it basically was an accrual type transaction. Note that as we post these, the beginning balances for the government-wide won't necessarily be so similar to the general fund. It really depends on what other type of funds are out there, what other activity is there. Our goal here is to have a beginning balance that's going to be in balance, have a chart of accounts, so that when we post these, we get some idea of what's happening in relation to other accounts, what happens in terms of the balancing of the chart of accounts, what kind of groups these accounts are in. So we're going to post the same transaction now to the government-wide. Note we're over here in column P now. Column P, we're going to say number 1, and I'm just going to call this a governmental activity. And in order to, I'm going to delete this governmental activity, and we're going to say that the taxes, once again, are going to be, the receivables going to go up, and then we're going to have the allowance. And then we're going to have the revenue. Notice what we're calling it down here, the general revenues on the property taxes. So slightly different name on the account down below to put it into the group of the general revenues. The numbers will be the same, so I'm actually going to take these with a journal entry or with a formula right from the prior journal entry. So in R3, I'm just going to say this equals, and I'm going to go back to the prior journal entry and just say it's going to equal the same debit that we had in the prior journal entry. And then I can copy that relative cell and paste it to these two items, and it'll just pull over the same relative reference. So the journal entry is in essence the same, except this account is named a little bit differently. So let's go ahead and post that. Same posting. We're going to be in the middle column here. So we're going to be in W4 equals, and we're going to point to that receivable. Then right underneath it, we're going to post the allowance. So we're in W5 equals, and we'll post the allowance. And then we're going to go down here to the general revenues. Here's the general revenues. And that's going to be equal, and we'll increase the revenues there. And so there we have it. So similar journal entry between the government-wide and the general fund. Next, we're going to go to number 2, collected property taxes. So we collected property taxes. Now that's one, of course, where we had cash was collected. I'm going to say number 2 in D7. I'm going to say this equals the same general. And then we're going to post our transaction. Now cash is affected. That's good because cash is cash, right? So cash went up and it's going to be a debit. So we know that much. Can be pretty confident with that. And then the other side is going to be the receivable, because we collected taxes that we just recorded as something that was owed. So the receivable is now going to go down. So this is very similar to accrual accounting. This is what we would basically expect to see if we were to apply the accrual type of accounting to the governmental. Remember that the general fund is on modified accrual, so we're going to see some tweaks at some point, you would think. So we're going to say that this equals the collection on the property taxes and the receivable. So let's post this out, see what happens. The cash is going to go up, so we'll go up top. We'll say cash is up top in L3 equals, and point to the debit, increasing the cash. And then we're going to go to the receivable, current receivable. I'm going to double click on it because something's in it. Go to the end of it and say plus, point to the credit, and that's going to bring it back down. So we're left in the receivable at 807. Now we'll do the same thing for the government-wide activities, which is on an accrual basis as opposed to the modified accrual, and it'll be much the same because everything looks pretty much accrual thus far between the two. So we're going to have the similar transaction. Actually, I'm going to move it down one here. It's going to be on this line, give us some activity, some room. And that's going to be a debit to cash and a credit to receivable. Same type of transaction. I'm going to pull this information from the last journal entry. So I'm going to say equals in R7, just pulling that same number over. And there we have it. And then I'm just going to say negative of that number. There's our journal entry. Let's go ahead and post this one out. It'll look much the same. So we're going to go over and say in cash in W3 equals the debit. That's going to bring the cash up. And then we're going to go to the receivables. That's going to be in W4. Something's in it. I'm going to double click on it, go to the end of it and say plus, and then point to that credit, bringing the receivable down, putting us back in balance down below. Okay, next transaction, we got number 3, collected delinquent taxes. So now we've got those delinquent taxpayers. So we're going to say we collected the delinquent taxes. We know cash is affected again because cash is going to go up. So that's easy. So cash is cash. We're going to say cash went up. That's going to be a debit. Now we got delinquent taxes and the interest. We got both of them. I'm going to put them in one journal entry. That's 57.7. If we add them up, I'm going to use the sum function to do so. Equals the sum of these two items. There's the 57.7. And then we're going to say the taxes receivable. Note, this is going to be, we got the cash. We already recorded the revenue in the prior period. And then when we recorded the revenue, we would have put it into current receivables. And then at the end of the period, we're going to move it to delinquent. So it's delinquent. It should be in delinquent receivables at this point in time. And we'll see that process later in the problem when we will have to move our current receivables to delinquent any receivables that haven't been collected. So we're going to reduce this receivable. So we're going to say, all right, delinquent receivables is the credit. And that's going to be for the 52.9. And we have another receivable, a completely different receivable for interest and penalties here. So we have the interest and penalties receivable. We're going to record those separately because one reason is because those are always going to be delinquent. So I don't have to deal with this basically current and delinquent kind of issue. Anytime we assess interest and penalties, they're already past due. So we could just put them into their own basically receivable for past due, delinquent, interest and penalties. So we're going to break that out. It's already got a receivable in it. So there's what's in it right now. And so we're going to reduce it because we collected 4,800 of it. So there we have it. And so now the debits equal the credits. Let's go ahead and post this out. We've got the cash up top. We're going to post that to the cash up top here. We're in L3, double clicking on it, going to the end of it and saying plus, then pointing to that 57.7. That's going to increase the cash. Then we've got the taxes receivable delinquent. So here's the taxes receivable delinquent, and it's going to go down. So we're in L6 equals that 52.9, making that go down. And then we've got the interest and penalty receivables. Here's the interest and penalty receivables in L8 equals, and we're going to point to that 4,800, bringing the 40,000 down, putting us back in balance down below. So there we have that. And again, this has a couple different types of receivable accounts here, but in essence, it's pretty much straight up accrual accounting thus far. However, we now have the funny thing that's going to happen that's going to basically be the modified accrual thing that's happening in the general fund, which is related to this item as well. And that has to do with this deferred inflows of revenues. And so in order to see this, we'll really be able to understand this better when we see us increasing this deferred inflow of resources. But in essence, you'll note what happened here. We recorded up top the revenue on an accrual basis. So that's on an accrual basis, and this is modified accrual. And then at the end of the time period, what we're going to do is we're going to figure out how much of the revenues are not collectible, and we're going to reverse it out. So the point is, on a cash basis, we wouldn't have these receivables. So the modified accrual is kind of saying, hey, I don't want to recognize the revenue yet. If I want to make the revenue more on a cash basis, not want to recognize it, but I still want to record the receivable, which is an accrual account. So what do? We're going to reverse at the end of the year the amount that's uncollectible out of revenue, and we got to put it somewhere. We can't take it out of the receivable. We're going to put it into this basically deferred inflows of resources. So that's in essence taking us into a cash basis on the income statement in essence, and keeping us on an accrual basis on the balance sheet, which is the receivable account, which is an accrual account. So we'll see that as we go forward. Here now, we need to basically reverse this deferral. So we're going to debit deferred inflows of resources for this 57.7 because we reversed it last time, and then we're going to credit the revenue. So we're increasing the revenue in essence on a cash basis at this point. We're saying, hey, we collected this period. We're going to reverse the deferral, which we reduced revenue by last time, which we'll see later on this problem. And then we're going to record the revenue more on a cash basis at the point in time we received it at this time. So in this method, note what happens here. We get to record the receivable, to decrease the receivable, and we get to basically keep on recording cash more on a cash basis. But in order to do that, we have to deal with this funny account here, deferred inflows of resources, which acts kind of like a liability, but is a separate category type of account. So let's go ahead and post this out. We're going to say that this is the deferred inflows. We're going to be in L11 equals, and we're going to go to the 57.7, and then the revenues, something's in it, so we're going to go to revenues, double click on it, go to the end of it, and plus, and go to that 57.7, and that'll increase the revenue. Now we'll record this in the government-wide activities, and of course it'll be on an accrual basis, so we won't be dealing with this funny reversal of the deferred inflows of resources, which is nice. So let's go back over to the government-wide. We're going to say this is going to be number 3, and it's going to be the governmental activities. And so we're going to say cash is, let's put the cash up top. So we're in Q10. This equals the cash. It's going to go up. And then we've got the receivable on delinquent taxes. So that's going to be this item. And then we have the interest receivable as well, just like our prior transaction. The first one, not the second one. Then we're just simply not going to record the second one because we're not dealing with, you'll note we don't have the deferred account down below because we're on an accrual basis, not the modified accrual basis. So I'm going to scroll back over here and pick up these numbers from the prior journal entry. So there's the 57.7. I'm just going to go ahead and copy that now and paste that down here, and we'll pick up the relative references. So there's the same numbers we had in the journal entry for the general fund. And now let's post this out. We got the cash up top. Cash is going to go up top here. It's in W3. I'm going to double click on that, go to the end of it and say plus, point to the 57.7, and the cash is increasing. Then we're going to go to the taxes receivable delinquent. So we have the taxes receivable delinquent in W6, where this is going to be equal to that 52.9, bringing that balance down. Then we have the interest and penalties. So the interest and penalties receivable is going to be in W8, where we will say equals and point to that 4,800, bringing that item down. That's all we need for the government-wide activities. Once again, the difference being accrual, modified accrual, the government-wide, not dealing with the funny reversal for the deferred inflows of resources. Next, we have the imposed penalties and interest. So we're going to impose penalties and interest, number 4. And this is going to be in the general. So we're back in the general fund. So we're going to impose the penalties and interest. That means we're going to have a receivable. We're going to put that directly into the penalties and interest receivable. So we can think of it kind of like if you're comparing it to for-profit, like we invoice them, right? We bill them for penalties and interest. They owe us more. They owe us something that's a receivable. We're going to say this equals the penalties and interest. So we would expect that to be the case under accrual accounting. Some type of receivable makes sense. We're just going to group it there. And then we're going to say that there's an amount that's going to be uncollected. So we're going to collect 6,200. So the difference between the two is going to be uncollectible. So we're going to have this allowance that we think is going to be uncollectible that we're going to record right at the point in time that we do the billing, in essence, that we assess the penalties and interest. So we're going to have the 7,002, and then I'm going to make this a negative and then put brackets to do the subtraction problem. It's going to be the 7,4 minus the 6,2 brackets. So 7,400 minus 6,200 is 1,200, and I'm going to make it a negative number for credit for our worksheet. And then the difference is going to be the revenue. So we're going to record the revenue. Note this is basically kind of an accrual type basis. We got the allowance that we're recording as we go, but this is in essence an accrual type of account here. So then we're going to go and say the other side is going to go to revenue. Revenue is going to increase. And so this looks, fairly straightforward. We're going to go up top and post this out. So interest, here's the interest receivable. We want to post that here. It's in L8, something's in it. Going to double click on it, go to the end of it, say plus, point to that 7,400, increasing that amount. And then we're going to the allowance. That's going to be right below. It's in L9 where we say equals and point to that 1,200 and enter. And then we have the revenues. So here's the revenues. We're going to be in L13. Going to double click on it, go to the end of it, plus point to that 6,200, increasing the revenue. Now we're going to post this over to the government-wide, where it will look much the same because this is basically an accrual type transaction over here. So we're going to say it's going to be looking much the same on the government-wide. So we're going to be down here and say that we have the interest and penalties receivable, and then we're going to have the allowance, and then we're going to have the revenue, but we're going to put is going to be from the general fund, and we broke it out to interest and penalties. So we got a separate revenue account. So I'm going to say this equals this revenue account. Then we'll pull in our numbers. I'm going to pull them straight in from the journal entry. So I'm going to start in the debit on R14 and just say equals. I'm going to go back to our prior journal entry. There's the 7.4, picking that up. I'm just going to copy and paste the relative cell references. So I've copied it, Shift C, and then I'm going to shift down, right, and then Control V. So I just copied and pasted here. And so there's going to be our journal entry. So we're going to post this out. Here's the debit. So here's the interest and receivables. We're going to debit that. There's something in it. So we'll double click on it. We'll go to the end of it and say plus and point to that 7,400. Then we're going to post the allowance, which is going to be right underneath it. So we're in W9 where we say equals and point to that 1,200. Then we're in the interest and penalties. That's going to be down here in W13 equals, and we're going to point to that 6,200, and there we have it. Next transaction, we're going to scroll all the way back here and see what we have next. We're going to reclassify uncollectible taxes and interest and penalties as delinquent. So we're going to reclassify these items. So notice we have the current portion now. This is what is in the receivable that's not collected. This is the related allowance. We need to move these two from the current to the delinquent. So we're just going to move those two down from up top to down below. I'm going to do that. We could do this with one journal entry. I'm going to do it with two journal entries and move the receivable and then the uncollectible in two journal, or the allowance in two journal entries. So also note that if you do this in a book problem that doesn't give you a trial balance, then you'll have to, of course, track this number as we did here in, say, a T account and figure out what this number is going to be. Just like we did here, you'll have to go back to the problem and say, oh, well, here, this journal entry increased it, decreased it, T account making this information. We're going to put all the T accounts basically here so we can see it all happening and all these accounts actually balancing out. So let's do that. So we're going to go down below and say that we need to reduce the receivable. I'm going to say 5 general fund. I'm going to put the current receivable on the bottom, and that's going to be this amount, and it's going to be 807,000. Credit 807,000, and then we're going to put it into, this should be a credit, and then we're going to put it into the debit of the receivable that's delinquent. So I'm going to say this equals the receivable delinquent. So all we did was say, I need this to go down to 0, going to credit it, then it's going to go into whatever we have to do, a debit to the other receivable. So let's go ahead and post it. Here's the delinquent, that's going to be the debit. So we have the taxes receivable delinquent in L6, double clicking on it, going to the end of it, plus I'm going to put the cursor back down, scroll down. I'm going to pick up that 807, enter. So there we have that. And then we're going to record the receivable current. So here's the receivable current in L4, double clicking on it, going to the end of it, plus, put the cursor back down. I'm going to scroll down, 807, that's the one we want, enter. And that brings this down to 0, puts us back in balance. Now we're going to do the same for the allowance. It's got 135.8 in it. We need to move it from here down to the delinquent. It has a credit. We need to do the opposite to make it go down, which is a debit. So I'm going to say, all right, next transaction is going to be a debit. I'm just going to say of this delinquent, or this allowance, and then it's going to credit then the allowance for the delinquent. It's going to be for 130. It's going to be for 135.8. So 135.8. There's our debit and credit, moving the allowance down. So here's the allowance on the current. That's our debit. I'm going to go up top. Here's the allowance. Here it is in L5. Going to double click on it, go to the end of it, plus put our cursor back down, and we want to pick up that 135.8 and enter. Then the other side is going to go into the allowance for delinquent. That's in L7 equals, and we're going to pick up the credit 135.8. And so we've moved that down. So now we have the current's gone. We moved it to the delinquent accounts here. Now we would think that that would be it, but now we've got that funny thing that's going to happen again with relation to the modified accrual, and that's going to be dealing with this account again. So you'll recall when we started this off, we basically recorded our tax collection on an accrual basis up top. So we recorded it in essence on an accrual basis, increasing revenue. And then, so now we want to do a modified accrual. So we want to keep the receivable on the books because we want to track who owes us money, but we want to basically make our accounts down here, the revenue account, the income statement account, the timing accounts more on a cash basis. So what I want to do is reverse the portion of this revenue that wasn't collected, but I don't want to reverse it to the receivable because I still want to know who owes us money or what the receivable is. So we got to reverse it somewhere else. And we're going to put it into this deferred inflow of resources. So we're going to reduce the revenue for the increase in revenue that we put here that wasn't collected, to reverse it back to a cash basis, and then put the other side not to receivable because we want to keep the receivable on the books to know who owes us money, and then put it here into the deferred inflows. So let's do that. This is the funny thing. This is the new thing. This is the different thing. So we're going to say the revenue is going to go down. Again, funny, that's weird. That doesn't normally happen. Revenue normally only goes up in the credit direction. We're going to decrease it. And the other side is going to go to this deferred inflows. And that acts kind of like a liability, but it's its own grouping. And basically, it's just the reversal we had to put it into because we couldn't reverse the receivable. We had to put it somewhere else. It acts like a liability, this reversal. So it makes sense to group them kind of in the liabilities area. So the amount we're going to have is the amount that was uncollectible. So remember, that's going to be the amount that we just moved out. So this was the amount that was uncollectible minus the allowance. So we're going to have this, the 807 minus the allowance. And then we also want to pick up the 6,200, the amount that we expect to collect on the penalties, because you'll recall that we recorded that as income over here as well. So we also want to include this 6,200, so that's the 677,400. So we're going to say debit and credit that. So we're going to reverse the revenue by that amount because that's what we've included in revenue that we didn't make collections on. So we're going to basically go more to a cash basis. Going to double click on the revenue, go to the end of it, say plus, point to that 677,400, decrease in the revenue. And then we can't put it to the other side again, not going to receivables, but to this new account because we need to put it somewhere. So we're going to double click on it and say plus and scroll back down, and the other side is going to go into the deferred inflows. Now, when we collect on it, anything we collect next time period that was delinquent, we're going to have to basically take it out of the receivable like we would normally do, as we did in the prior journal entry up top, and then we're going to have to reverse the delinquent item here as well, recording the revenue in the period that it was collected in. So now we're going to do the same thing for the government-wide, but we're not going to do this second piece. We'll just record this first piece, which is an accrual piece, and then not the second piece, which is the modified accrual component. So we're going to go back over to the government-wide. We're going to do the same process, which you'll recall is just taking this 107 and this 135.8, moving it from current to delinquent. So to do that, we're going to say, we'll do it 2 journal entries as we did in the general fund. I'm going to say we're going to debit the delinquent to increase it, and we're going to credit, whoop, what had happened there? We're going to debit the delinquent, and we're going to credit the current account. And I'm going to pull these numbers from the prior journal entry. This equals, I'm going to scroll back over to the prior journal entry. It's going to be the 107. So let's record this first. So I'm going to record this out. Here's the delinquent. Up top, we're going to say here's the delinquent accounts. We're in W6. Going to double click on it. Say plus. Put the cursor back down. And then pick up that 807. Then we're going to do the current side. So we'll go back up. Here's the current. Here we are in W4. Double click on it. Go to the end of it. Plus. And we want to pick up the 807 and enter. So that takes it down to 0, moves it down to the delinquent. Now we're going to move this amount out to the delinquent. So that's the allowance. It has a credit balance, so we're going to debit it. So we're going to go back down and say we want to pick up the allowance current, and then we want to pick up the allowance on the delinquent, and the amount is this 135.8. So I can say it's going to be 135.8 debit and credit. So we're going to move that out. So here it is on the current portion. So here's the allowance current. Going to double click on it, go to the end of it, plus, and then pick up that 135.8 and enter. So we removed it there. We're going to put it into the delinquent. So in W7 equals, scrolling back down, we'll pick up the delinquent. So there we have, we moved it out, and we're not doing that second piece. We note we don't have that deferred inflows here. If we wanted to compare now the revenue between the two, we could say here's the revenue for the property taxes and the government-wide. Here's the revenue for the general. And we could take a look at the difference between those two. And if we wanted to think about where that difference comes from, then we could use these items up top, and you could find these if you go to the formulas and the formula auditing. I move them up to the shortcuts, and then you could say, okay, that's what's making up the revenue in this account. What's making up the revenue over here? We've got these journal entries making up the revenue. And so based on that, you can figure out the difference between the two. So once again, here's the general fund. So quick recap. Here's the accounts. And then here's the government-wide. And here are the accounts.